markets made new highs this week. I don't find a lot of people cheering and happy. Most of our institutional clients are skeptical of this recovery because they feel that there's still looming uncertainties, whether it's the FOMC or the tariff deadline. So, as you know, markets don't peak when investors are skeptical. They peak when there's over exuberant enthusiasm. There's no signs of that. The Fed is on hold, but the Fed will resume cutting once they're confident inflation is not a problem with the tariffs. Now, I don't know the date that starts, but if the Fed becomes dovish, that's more central bank liquidity. That should benefit the financials. It benefits small caps, which are highly correlated to that trade, the regional banks, but it also benefits the cryptocurrency complex because that is highly sensitive to central bank liquidity.
Stocks keep hitting new highs, but the mood on Wall Street is far from celebratory. Instead of excitement, there's a sense of cautious anticipation. Despite the rally, investors remain on edge, worried about everything from Fed decisions to global trade tensions. It feels like many are waiting for the other shoe to drop, not the kind of euphoria that usually marks the end of a bull run. Market veteran Tom Lee sees this anxiety as a potential buying opportunity. He notes that markets rarely peak when fear is still in the air. His focus is on the Federal Reserve. If the Fed pivots and begins cutting rates, it could unleash a wave of liquidity that lifts not only stocks and banks, but also Bitcoin and the broader crypto market. Bitcoin, after all, thrives on easy money. Historically, it responds well when inflation eases and central banks turn dovish. If that pattern holds and the Fed loosens policy, Bitcoin could shake off its recent stagnation and make another strong move upward.
You continue to say that this is the most hated V-shaped rally. Is it still?
Yes, the markets made new highs this week. I don't find a lot of people cheering and happy. Most of our institutional clients are skeptical of this recovery because they feel that there's still looming uncertainties, whether it's the FOMC or the tariff deadline. So, as you know, markets don't peak when investors are skeptical. They peak when there's over exuberant enthusiasm. There's no signs of that today.
They're not wrong with wondering about the uncertainty relative to those issues, are they?
They're not wrong, but I think it's the amplitude that people got wrong. So in April, people thought if you didn't have a trade deal, we'd have economic Armageddon. But now what they're finding that is if you're wrong, it's just we don't have to fall off a cliff. And so there can be diplomatic solutions or even pushing off deadlines.
Okay.
You know what? There's $7 trillion of cash on the sidelines, and retail investor sentiment, I think you have to really fracture it. I think the Robinhood community is bullish, but what I'd call the high net worth and the traditional equity investor is still pretty cautious. That's the heart of our universe of clients. So I'd say that speculative activity, it's kind of, those are such small examples that I would say it's way too early for me to say they're speculation.
Such small examples. I mean, the high beta ETF has been hitting record highs almost every day. But we're not talking about garbage stocks.
Sure, but high
either.
beta as an ETF, if you look at that, it usually should lead in a bull market. So it's not unusual, just like momentum MTUM should lead. But the thing to keep in mind is that in 2021, when Goldman cites that data, people were speculative excess in these big Mag 7 and these large cap names. There is hardly any euphoria in those stocks. But if I were to define speculative excess as someone making an assertion that is not based on current fundamentals, but then believing that their view is correct, right? That's a speculative bubble.
Still paying taxes on your crypto gains? What if you didn't have to? With ITrust Capital, you can buy and sell crypto inside a tax-advantaged IRA, giving you a smarter way to grow your portfolio without worrying about capital gains tax. That's why they're the #1 crypto IRA platform in America, with billions in tax-advantaged transactions. There are multiple ways to fund your account. You can make a contribution, transfer an existing IRA, or roll over an old 401k or employer plan. You'll get access to a wide range of digital assets, low fees, and 24/7 trading, all backed by secure, one-to-one asset ownership with institutional-grade custody. And if you have questions, ITrust Capital offers 100% US-based customer support with real people ready to help. Click the link, use code DOSE7, and get your $100 funding bonus today. Start building your crypto wealth, tax-advantaged, with ITrust Capital.
There's a speculative bubble that inflation is coming back, and there's a speculative bubble that we are on the precipice of a recession, because that is probably the most common conversation I have with clients, and every Zoom I've done with an institutional account, always 5 minutes in, someone's like, Tom, how come you're ignoring all the risks out there? Don't you realize we could already be in a recession? So I think there is speculative excess in the fact that we're in a recession.
And negativity.
Yes, just like there was a bubble of pessimism after GFC. Remember, from 2009 all the way through 2019, it was a bubble that another financial crisis was coming. It was a bubble of pessimism.
Tom. I mean, that was just not a regular occurrence.
Correct. That's right. And the market today has PTSD of trade and the Fed. The Fed is on hold, but the Fed will resume cutting once they're confident inflation is not a problem with the tariffs. Now, I don't know the date that starts, but if the Fed becomes dovish, that's more central bank liquidity. That should benefit the financials. It benefits small caps, which are highly correlated to that trade, the regional banks, but it also benefits the cryptocurrency complex because that is highly sensitive to central bank liquidity. So I think the banks and the financials and small caps and the cryptos kind of move when the Fed becomes dovish. The financials have recovered, but they still haven't become expensive. And that's because there's another lever that gets pulled. When you cut rates, then mortgages become affordable, and it actually expands the credit cycle. And keep in mind, the ISM has been below 50 for 29 months. That's the longest stretch in the ISM's history. So I think we actually, to Chris's point, if the Fed starts cutting, I actually think we have a cyclical recovery that is good for cyclical stock. We have 15 million household formations in the past 10 years and only 13 million homes built. So we have a shortage of housing that's worsened because interest rates are high, that is actually causing home prices to stay elevated. So I think there's a policy problem. And the other thing to ask is, if true inflation's at 1.8 and core PCE is at 2 and the Fed's at 4.5, it's very difficult for the Fed to explain why they are keeping real interest rates high, which really hurts consumers. So I think there's other policy measures that can be done to slow the economy, including the fact that there's all these tariffs in terms of taxes for businesses. So if someone told me there's $400 billion taxes going on to the economy and said the Fed has to stay tight, it's counterintuitive to me.
Instead of excitement, there's hesitation. Institutional investors remain cautious, worried about inflation, rate policies, and global trade. It's an unusual rally, steady gains but with little enthusiasm. Skepticism is everywhere, and ironically, that might be why the rally keeps going. Markets rarely peak when everyone expects the worst. They peak when risks go unnoticed. Much of this caution comes from misunderstanding the bigger picture. Earlier this year, delays in trade deals and persistent inflation raised fears of a sharp downturn. But that drop never happened. Instead, we're seeing a gradual adjustment, more policy tweaks, and fewer crises. While retail traders chase momentum stocks, overall market participation stays low. Over $7 trillion still sits on the sidelines in cash. What's quietly happening is a liquidity-driven shift. If rate cuts return and policies loosen, capital will flow, lifting small caps, financials, and risk assets like Bitcoin. The lingering pessimism from past cycles blinds many to the hidden strength below the surface. This isn't euphoria, it's disbelief, and that's often just the beginning, not the end. Let's check out more from the interview.
I think many people, when April happened and we had Tariff Armageddon and the market went into a free fall, investors liquidated because they thought we were entering a recession. But, and as you guys had covered, like the market then staged a V-shaped recovery, which caught many people off guard because they wanted to have a chance to get in. They wanted the stock market to be like a K-shaped or flat line. Instead, it was a V-shaped bounce. And so most investors are underexposed at the moment, and they're trying to look at headlines with a half-empty view. But as you guys know, earnings have actually been really resilient, and I think it tells a very good story.
Yeah.
What we're saying is, instead of someone saying, oh, the MAG is making the market expensive, let's just take the average PE of the S&P of every stock, and it was around 17.6 times in 2019. Now we've had 6 what I call extinction-like events, COVID, the bullwhip supply chain effect, inflation surge, Fed fastest hikes, Trump tariffs, and then, of course, U.S. bombing Iran.
6 of them, yeah, okay.
Yeah, all of them should have wiped out earnings, but the S&P earnings have grown, and yet the equal weight PE is now 16 times. So the market's gotten cheaper in the last 6 years, despite proving they can grow earnings through 6 extinction level events. I mean, to me, the Mag 7 have become household names. You know, like Apple is Apple, and Google is Google, and we know the product and we know the stock. And I think they have really established themselves as consumer and business companies. And for me, Apple has been sort of quietly ready to pounce on AI, but I don't think they need to pay up for any of these models. So I think Apple is going to surprise people. I think the 200 to 250,000 for Bitcoin still makes sense because that would still only value it at 25% of the size of the gold market.
Okay.
So I think digital gold means Bitcoin should be worth over $1 million per Bitcoin, and it could happen in the next few years. But maybe pricing 25% of that, especially with Genius Act, makes sense.
Are you going to, I don't know, start making comments and recommendations about stablecoins?
Yes. I mean, in a sense, stablecoins are the ChatGPT moment for crypto because businesses like it and consumers are adopting it. And now we see JP Morgan and Citi and getting into the stablecoin market, and the Genius Act, of course.
How would you play that?
Well, Circle is one way because it is, a standout company. They've done really well. But Ethereum is really the way to play stablecoins because the majority of stablecoins are created on Ethereum. It's over 30% of its network fees. And if Scott Bessent's right in it, he says now it's close to a $4 trillion market. That's exponential growth for Ethereum.
Markets shook when tariffs first sparked fears, but instead of falling, stocks quickly bounced back, leaving cautious investors behind. Those waiting for a long slump missed one of the sharpest rebounds in recent memory. Even now, despite gloomy headlines and risk talk, corporate earnings have held steady. America's businesses have weathered everything from the pandemic to aggressive rate hike. Rather than overheating, market valuations have actually cooled, a far cry from the excess you'd expect after such a run. Meanwhile, the tech scene is quietly changing. The AI boom is reshuffling the top players. Some big names are pausing, while others are building for the next breakthrough. In crypto, Bitcoin's story is far from over. Six-figure price targets are moving from fantasy to a real possibility, especially compared to gold's place in investing. With stablecoins gaining ground, Ethereum could be the engine powering a new wave of innovation in digital finance. This isn't just a comeback, it's a reimagining of what's next. Do you agree with Tom Lee that skepticism means the rally still has room to run? Share your thoughts in the comments below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.